Good morning, everyone. Let's look at the pound and where we are in pound dollar and euro pound, because it's the hot topic at the moment and there's quite a lot going on. And I'm a little bit, whenever you're in a wedge consolidation, especially because we didn't tag this high, this level here, I'm wondering whether this was the first. It's very, very volatile. That's the first thing to say. But what if this was the first leg higher? This is an ABC pullback and we've got another equal leg higher to come. That would kind of fill this in pretty nicely if we did that. And as you know, I think that the pound short is a very, very crowded trade, and a lot of people will have jumped on lately yesterday, and I think Mr. Market's just going to teach them a lesson about that. So let's take a look at the evidence. First of all, on this daily candle, there's the 50% rule and the Maribosu line that we can take a look at. What does that mean? That means if we take a look at this big red down candle we had yesterday, if we extend more than 50% of the open close of this candle, which let me put this on the right so we can read it, would be 128.81. That's usually a sign of a bullish reversal. If we're going to continue lower, 128.81, 50% of yesterday's open close, which I'm going to mark now, is a good place to look for a reversal. So we'll mark that level. This other thing that I would like to point out is if we look under the hood here, what we've done in these two swings lower, and we've got quite a big move going on, is we've made an exact, as in to the tick, equal measured move. And whenever you see an ABC exactly equal measured move like this, it usually means correction over. If we go down as well to an hourly, then you last legs of corrections usually should be complete 5 waves, and here we've got 1, 2, 3, 4, 5 waves complete. So I think that we are potentially lining up a bit of a short squeeze here in the pound, and above 128.81 would confirm. Another way that I do it is if we go more than the 236 of this entire drop. So if we mark that, where's that 236? If we go beyond that, which is 128.38, exactly where we are now, then we're probably going to keep going. So this is the level that I'm looking at, 128.38. If we continue through that level, we're going to go at least back to our 128.81 and probably beyond. So that's the first level that I'm looking at. The second level, the second way that I think we can put some rules in this is this was an if we look for a minimum second target after this 128.81, I've got let me see, object tree, here we go, this fib retrace. If I put fibs on from this low to this high, we're bouncing from an 886 fib retrace level. When you bounce from an 886 fib retrace level, your first target is back to the 50% in the middle, which would be 129.36. So the reversal here has a first target of 129.36. If obviously we can get above this 128.28 level. And then the second target, believe it or not, is the 236 fib, which would take us back to 131.26. And then I think we go back to the top of the range. So pound, I could make a good argument for a short squeeze on an hourly close above 128.28. And so let's see what's happening with the euro pound, because that's the other interesting setup for today. And I don't honestly spend my whole time looking for contrarian trades, but if we look at where we are in the euro pound, I'm not a huge fan of trendline resistance, and we're not quite tagging it, but I am a huge fan of fib retrace levels, and we've come quite a long way in a straight line. And if we look at what we've done since the high that we made in August, we are at the 50% level exactly of that high to low, and we're also at the 78.6 retrace of the high from the high on the 30th of October. Retraces, reversals at a 786 fib usually come back to the 382, which would mean a drop from here all the way back down to 0.8762. That would be quite a squeeze for people who sold the pound against the euro as well. Obviously, in the middle, we've got a whole bunch of moving averages, and the first support, that where we're going to fail in this short idea is at the 200-day moving average and the daily 50 moving average, which are just below at 88.31. But I think we can confidently say if we trade underneath 88.31, then we've got a short to 87.63 and a reversal going on. So that's what I'm looking at. And these, if we're going to keep going, we should likely do a small inside day, hold above the daily 50 and 200 moving averages, and then carry on higher. So that's how I'm seeing the pound and the euro pound. I know there's a really nasty news tape. I know that doesn't look like this deal. I don't know. Let's put it this way. If the deal does hold together and if it does get through Parliament, I can't see it, but if it did, the pound would explode. I'm pretty sure the pound would explode. So that's how I'm seeing those two this morning. Good luck.